So let's stick with this cheap ETF theme. Now, Dave, you brought along an ESG portfolio, environmental, social governance, dedicated to socially responsible investing. Now, this is supposed to be one of the hottest trends this year, every other year too. Break it down for us. I'm bringing this up because they're really trying to push this again. How many years we're going to keep pushing this? Just show us a cheap portfolio. If you wanted to do socially responsible investing, let's call it that generically.
So we put up the cheapest ESG-based portfolio you can get with ETFs. We use the same sort of aggressive growth weighting we used when we were on a few weeks ago talking about the cheapest overall ETF. This mixes up ETFs from Vanguard, from Deutsche Extracker, from iShares, from Vident, from State Street. So it's got a broad selection of ETFs. Your all-in costs here are about 17 basis points. Still in institutional pricing
$17 per 10,000. That's what we're talking about.
There are a couple cheats here. So there is no such thing really as ESG commodities futures. So we've swapped in a sort of a clean power portfolio for that. But even if you take those things out and just consider those cash, you're down at 15 basis points. It's still institutional pricing.
Kevin, we all agree socially responsible investing is important. The millennials love socially responsible investing. Why doesn't it outperform, and why is there still money flows that are, let's call it modest?
Anemic, I think.
Anemic, thank you. I don't want to, that sounds like I'm being cynical about it because I think it's an important area, but it doesn't seem, the interest level is not that high, even though everybody says it should be, and the outperformance isn't there. Maybe it's still too early to tell. I don't know.
The truth is the performance has been abysmal. The definition of what makes something socially responsible. I thought being socially responsible was to make money for your investors. And that's never been changed in my view. And as far as I'm concerned, people say to me, you shouldn't own a tobacco stock. Here's my answer. If you're so stupid that you smoke, I should deserve to profit off you. That's the way I look at it.
But the other way around on this thing is companies that are more socially responsible get heavier weighting. So it's not just we don't buy.
What does it mean to be socially
tobacco
responsible?
stocks.
Is it socially responsible in the jurisdiction where you operate? Is it in your community?
Well, there
is it
are
in
metrics
India?
that are being developed. I mean, that's what the whole game is.
There are definitional problems in this space, and there are some places where it's clear the performance actually is improved by things like good quality governance screening. That keeps you out of things like Volkswagen at the right time. Those things have proven to work. Where it gets much trickier is when we start going towards so-called sin stock screening, whether that's tobacco or gambling or things like that. Nobody's really claiming that hard that pulling tobacco stocks out is going to somehow generate alpha in your portfolio. So people have to be aware that when you're making an ESG investment, often it's a non-economic decision, right? These are things people want to do for reasons other than making money.
I think this is thematic, it's a fad, it's like sitting around the fireplace singing Kumbaya. It makes no sense to me. If you're an institutional investor, you have to make money for your shareholders. They can take their profits and redistribute their wealth any way they want. If they want to save a baby whale, save a baby whale.
Who actually believes in the concept, even if it doesn't outperform.
I don't. I think it's ridiculous, and I think at the end of the day, long term, if you can't outperform the market, it doesn't matter what you call yourself. You're just not going to attract any capital. At the end of the day, people take capital and put it at risk, and they want a return. Yep. It's not about kumbaya.
All I can tell you is Inside ETFs is going to be 2 weeks from now, and we're going to get another tidal wave of people arguing that these kinds of things are going to be hot again. This has been 20 years, but we have much better guidelines for what ESG actually
Bring me to that session. I'll bring my guitar and I'll sing Kumbaya.